Good day and welcome to US Stock Express. It's December 15th, 2025, and we have a lot of ground to cover in today's market update. Is the explosive AI boom finally facing a catastrophic reality check? Why are investors suddenly sparking a modern-day gold rush? And how did one stock surge 5% while the rest of the market tumbled? We're answering all of that, starting right now. First, let's dive into the broader market numbers. The S&P 500 took a modest step back, dipping 0.34%. Over in tech land, the Nasdaq 100 felt a bit more pressure, sliding 0.83%. Meanwhile, the small-cap Russell 2000 had the roughest day of the bunch, falling 1.16%. And in a classic display of resilience, the Dow Jones Industrial Average barely flinched, edging down just 0.11%, almost as if it decided to take a very long lunch break instead. Now to our top story. A global AI system designed to optimize coffee production went completely haywire, causing a bizarre and highly caffeinated crisis. This event perfectly highlights the very real perils of over-automation in our critical food supply chains. Let's get into the chaotic details of what we're calling the Great AI Coffee Catastrophe. This was a global tech meltdown, and believe it or not, it was all triggered by a single poorly coded AI barista. That one faulty algorithm created a ripple effect of caffeinated chaos, leading to widespread disruption across the global coffee trade. It's a stark reminder of how fragile our interconnected systems can be. But while that high-tech fiasco was unfolding, some investors were looking in the complete opposite direction for opportunity. Case in point, Lafleur Minerals is raising millions to restart a major gold mine. This move proves that even in our high-tech future, some investors still want the tangible security of the Midas touch. And this wasn't just a quiet investment. It sparked a full-blown cultural phenomenon. We saw skyrocketing gold prices and a surge in amateur prospectors. This modern rush reshaped markets and communities almost overnight. The reality behind those headlines was both surprising and chaotic. This was a digital age frenzy, driven less by pickaxes and more by a perfect storm of economic anxiety and viral social media trends. Now let's shift from commodities to some major individual stock moves. First up, Broadcom, ticker AVGO, with a classic case of good news, bad news. They reported blockbuster earnings, with AI revenue soaring a massive 74%. So why did the stock fall over 6%? Investors fixated on the CEO's comments about lower profit margins in that high-growth AI business. It seems even stellar growth can't please everyone when a stock is already priced for absolute perfection. On a brighter note, let's talk about Eli Lilly, LLY. Its dominance in the anti-obesity drug market looks increasingly unshakable. Bank of America just reiterated its bullish stance, highlighting two key pipeline drugs that could launch in 2026 and drive revenue far above current estimates. With stellar trial results, Lilly is poised to solidify its lead. Moving to the retail sector, Costco saw its stock fall over 3% today. The dip came after an analyst at Roth Capital downgraded the stock to sell, citing concerns over slowing sales growth. However, not everyone is convinced this is a long-term problem, as bargain-seeking shoppers might actually flock to Costco's value proposition. Staying in tech, AMD wasn't immune to today's pressure, falling 2.2% amid a broader sell-off fueled by AI bubble fears. But analysts are pointing to a powerful long-term catalyst that many are overlooking: the company's strategic push into the emerging quantum computing ecosystem. Now for a steeper decline, ServiceNow, ticker NOW, tumbled over 11% on a double dose of bad news. First, reports surfaced that it's nearing a massive $7 billion acquisition of cybersecurity firm Armis, which spooked investors about the cost. To make matters worse, an analyst downgraded the stock, warning that AI could actually hurt demand for its software by making workers so productive that companies need fewer subscriptions. The tech sell-off also dragged down Coinbase. The crypto exchange, fell sharply, mirroring a significant drop in Bitcoin's price, which briefly breached $90,000 before retreating. Coinbase is now testing its break-even level for the year, proving that even in the digital age, what goes up must come down. That sector-wide pressure also hit CoStar Group, CSGP, which fell 6.6%. Even though the company recently reported solid earnings and saw increased institutional investment, it simply couldn't escape the tech downdraft today. But it wasn't all red in the tech space. Gartner, trading under the ticker IT, moved in the opposite direction, posting a significant 5.3% gain. This suggests some investors see it as a safe harbor or a smart play, even while other tech names are faltering. Finally, let's look at a fascinating disconnect in the materials sector. The stock for fertilizer giant Mosaic, MOS, dropped 5.2%, but here's the twist. During the last quarter, major pension funds and investment firms were busy significantly boosting their stakes. This suggests a potential gap between short-term price action and strong long-term institutional conviction. That wraps up today's market update. Thank you for watching. Stay informed, and we'll see you next time.